All right. Hello, everybody. Welcome back to another market close. It is Thursday, June 27th, 3:45 p.m. I'm on time. No one can say anything. No more jokes in the chat. Not today. Not for this stream, because I'm on time. We got a lot to talk about. Palantir has had a little bit of a breakout today, and kind of a breakout that I think a lot of us thought was coming just because it was stuck in that 2430, 2450 range for the past couple of days now, and it kind of seemed like it wanted to break out, but it just wasn't breaking out. We ran to 2660 last week, really off no news, kind of just running up, and then we fell back down. Nvidia fell back down. Macro got a little whatever. Now, with the news we got this morning that I'll review for those that haven't heard about it, and it looks like some decent PCE data that's going to come out tomorrow, you get a nice green candle on Palantir. There we go, 25.23 on the day. We started off the day at this was right about here, 24.02, kind of in the pre-markets, and we gapped up a little bit higher as the news came out. And then we just kept going. We topped out at 25.40, right now at 25.23. Look, I think the news, although it's not substantiated by numbers or length of contract or whatever, it's just a really cool deal. And now, granted, that is one thing that we'll talk about, and I think that the market's excited about that, up 4.69%. But also, SaaS is not being sassy today. Look at the left-hand side of my screen. Green across the board on SaaS. GitLab is up, Twilio's up, Intuit, Zscaler, CrowdStrike, Net, ServiceNow, Adobe. Adobe basically, I think, recovered most of the gains they had, or most of the losses they had this year. MongoDB, Atlassian, Salesforce. Very interesting. Salesforce was at, to start the year, or actually just in May before earnings, at 285, went down to 212, now back to 250. So if you got the Salesforce dip, you've done well so far. And is this because SaaS has necessarily changed in the past 3 weeks? I don't really know. Is it because it's just macro? Is it because Adobe had good earnings, so investors are kind of thinking they were scared for no reason? We'll see what ends up happening. But right now, it seems like the market has gotten rid of most of their concerns for SaaS. They probably still want to see AI enabling a lot of that growth, but they are ready to buy SaaS again. Oracle's up, Confluence up, Snowflake up 3.43% today. TJ and I closed out the puts we had on Snowflake. We had a $120 strike. We picked up about $2,800 today. I'll show you guys the picture on Snowflake. He'll be on live tomorrow, and we'll talk about the moves and give you guys updates on the portfolio. But about 2,700 right there. So about 80% on the Snowflake puts. We had 10 of those contracts. They were expiring July 19th. When you're up 80%, there's no point to risk it for another 20% in the next 2 weeks. So we closed those out, and we're able to capture some gains there. So not bad at all in the SaaS ecosystem. And that's another reason why I think Palantir is doing well. Obviously, the market already wants AI exposure. Palantir showing this deal they got today, continuously pushing the AI exposure, and then SaaS doing well. So what was the deal Palantir got today for those that don't know? I'll have an entire daily Palantir video where I go deeper on this in depth later today. But Palantir partnered with Voyager Space to leverage AI to drive innovation in space technology. This comes 1 week after they got a deal with Starlab, which is making a commercial space station. And Voyager's going to be using Foundry and AIP, Palantir becoming the operating system for their enterprise, to onboard customers of the Starlab commercial space station. Again, showing the symbiosis of both companies using Palantir software in the middle. This, to me, is based on the network effects of Palantir creating the foundation to get more deals in the growing space sector. And I think it's a big deal. And the reason I think it's a big deal is because the space TAM is gigantic. SpaceX just got basically $1 billion contract yesterday. If Palantir wants to make space the next big vertical they go after, which I don't think they will, but let's say they want to put it up there in some of those top 5 verticals, then they already have a couple of deals to set up the foundation for this. Remember, they do have the Meta Constellation project. They have a deal with Satellogic that they got in April 2022. So they're no stranger to dealing with space. Healthcare, supply chain, energy, defense, and space might end up being the 5 verticals that end up carrying the company's next leg of growth over the coming, basically couple years. I think healthcare is going to be the biggest one. Supply chain probably the next one after that. Well, defense is at the top, obviously, and then healthcare, then supply chain, and then I think space and energy are kind of fighting for the last part. Right now, I would have to give it to energy because Matt Babin, I met him at AIPCon. He's the head of energy. They do a ton of business just for the energy sector. But if space is growing, it'll get exciting. As Frank says in the chat, Palantir is going to space. It'll be nice to see Palantir play a role because it doesn't look like that sector is going anywhere. And it speaks to the resilience of the business and the adaptability of the business to actually work in new sectors that are forming. Like, 20 years ago, space wasn't a thing. Even 10 years ago, space wasn't really a thing. But now, given SpaceX has been successful, they had a successful rocket launch, Falcon launch, I think like 2 days ago. It's showing that space really does have a lot of momentum. So that's what we had on Palantir. Bitcoin showing some nice gains today. Was at 62,000. Right now it's at 61,300. The SEC is being sued by Coinbase. So that's one piece of news that came out today. Brian Armstrong is basically accusing the SEC of trying to get rid of crypto from the financial ecosystem. I don't know what the merits of the lawsuit are, but I'm happy that he's fighting back. And at least, the SEC now has to deal with the fact that they just can't bully crypto companies because they're going to get sued. And on top of that, Solana, the Van Eck ETF for Solana has been submitted to the SEC. So we know the ETH ETFs are approved. Bitcoin ETFs are real. If we get a Solana ETF, that's why Solana was up 8% on the day. That's going to be a very, very important thing for the broader crypto ecosystem. Solana, one of the most decentralized financial ecosystems / blockchains that a lot of people, I have a couple of friends that really swear by Solana. I mean, they believe it is the holy grail of cryptocurrencies. There's a lot of big momentum. Also, all these meme coins you guys are seeing, those are built on Solana. They're not built on Ethereum. They're not built on Bitcoin. Solana creates the infrastructure for people to easily make their own coin. So very good news in the context of Solana. Now, let's talk about Roaring Kitty, because we got some Roaring Kitty news. So about 2 hours after the market close ended, market open ended, we got a tweet from Roaring Kitty. Brown Dog says, my uncle works at BP and uses Palantir every day, and he says he loves it. He didn't know it was a public company until I showed him. He's now an investor. That's amazing. I got to take a picture of that. That's a great comment. That's great. I love it. That's huge, bro. That is absolutely huge. And I mean, it's nice to see someone actually using it and realizing that it's a public company. Okay, so this is what Roaring Kitty said. Well, he didn't say anything. He posted a picture of a dog. Now, this was very confusing to me because although I got some dog in me, you know what I'm talking about, because I'm a hustler, I was confused why Mr. Kitty. That was so funny. Why Mr. Kitty? Also, he's a kitty, so why is he talking about dogs, right? It was just all confusing why this was happening. And then I realized really quickly, there's a company called Chewy that makes dog products, and their stock, before Kitty tweeted this, or like I think it was up like 8%, and then went up another 8%, another 7%, was up 15% by the time he tweeted this. So Chewy, $33.70. It's not up 33. It's not up 15% anymore. Now Chewy is up nothing. It's up 0.07%. So it hit $40 at one point. Then it gave away all its gains. Now they announced $500 million in buybacks, which was good for like the company, but it was kind of weird that Kitty tweeted about them. Another layer to the story, Chewy is Ryan Cohen's old startup. He founded the company and he sold it for $1 billion or something. So I think he took it public 5 years ago. The point is he made a lot of money off Chewy. He's a founder. He was the founder CEO of that company. Why is Roaring Kitty tweeting about a stock, basically, right? This dog thing is basically about Chewy. That is Ryan Cohen, who's the current CEO of GameStop's old company. The only way to read into this, and I mean, we have no evidence on this, but I mean, could one imagine that Roaring Kitty has a position in Chewy? Could you imagine this? I mean, I would be quite perplexed if he does, but I wouldn't be that surprised given it's Ryan Cohen's old company. Chewy has had a great year. It was at $14 in April. Now it's at basically $30, so doubled. It got to 40 at one point. Buybacks, growth, all the stuff you're looking for is there. $12 billion market cap, trades at a price to sales of 1. So, I mean, I don't know all the metrics, but I don't think that's incredibly expensive. Could you imagine if Roaring Kitty is long Chewy? The short float on Chewy, let me check that right now. Chewy short float, CHWY. It was really interesting to see. He hasn't tweeted anything in like 2 weeks, and Chewy is the first thing he comes out with. 15% short. 50. So there is definitely potential for a squeeze. It can't be gigantic, but there is potential for a squeeze on Chewy. On Beneficial definitely called this one. He said he was in Chewy at 16. I never thought to look at Chewy, quite frankly. They just weren't on the radar. But then again, a lot of stocks like Robinhood wasn't on the radar for a lot of people at 10 to $12. Carvana wasn't on the radar for people at 70, $80. Chewy, at 15. A lot of people didn't think of it. So it's been a stock pickers market this year. And there are certain stocks that if you picked well when they weren't showing momentum, but you knew there was a story, they've been able to do well. So Chewy right here at $29.25. We'll see what happens with this Roaring Kitty tweet. I don't know if this is the last of it, but it is kind of weird. He did not tweet about GameStop. He tweeted about Chewy. Now, speaking of GameStop as well, up to $25, up 3.8% on the day. So what's his name? Kitty's up like, how much is he up? Probably like 10%, a little bit on his shares. Let's do the math real quick. 25 minus 23.41, a little bit less than that. He's up, 7.3%. Yeah. So he's up 7.3%. He's up some millions. He was down some millions a couple days ago. No fundamental news on GameStop other than it's just green today. But still no updates on what his plan is with GameStop. What are your thoughts on Nike? Okay, so that gets us into Nike. Durb was in Chewy at 19 as well. Yeah, congrats if you're Chewy long, because you've definitely had a lot to chew on. If you're anyway, so Nike. Yeah, I think Nike. Okay, let's do a poll in the chat. Do people think it's gonna dump or not? Nike, we talked a little bit in the morning. I kind of think the brand is not really alive and well. The thing is, the bull case for Nike jumping is that it's been, I don't know if it's quote unquote oversold, but it's been in the dumpster for the past 2 years. The idea that it rebounds is not crazy. But also it's just like, I don't know why the street would get excited about Nike. I really don't. I just put in the poll. Let me know what people think. Dump. Everyone thinks it's going to dump. Everyone thinks it's going to dump. I don't know, dude. I mean, again, the street's expecting 12.5 billion and about 86 cents a share. A little bit more than that. The street is expecting from Nike, 83 cents a share, 12.85 billion. I don't know, dude. We're going to see. As soon as the market closes, I think we get that right after the bell. We'll see what happens with Nike. It'll be a sign for the consumer, but I don't think it's going to be that important of a sign. I mean, like, same thing with Walgreens today, by the way. Walgreens now is down 22%. It has only gotten worse since we last talked. Brands that can't keep up with the growing economy, meaning that they're not growing while the economy is growing, just means those brands are becoming irrelevant, which it's what happens in capitalism. The problem is, I don't think Nike's irrelevant. I just don't think they're not as relevant as they were before. And that's why I think the earnings are going to be lackluster. But I also think there's a chance for a bounce because this thing has just been stuck to kind of be dead over the past year. It really has not moved in a meaningful way. At the beginning of the year, it was at 104. Yeah, so it's been down year to date. If they beat on any numbers or show anything exciting, maybe Nike gaps up a little bit. And we'll see what happens there. Doesn't Walgreens use Palantir? So why is it down? Well, again, a company can use Palantir and still not be the best company in the world, right? Walgreens is going through a lot of other issues besides, integrating their data management and data analytics correctly. Like Palantir can help them. Palantir, I don't know if Palantir can literally save a stock that's down 50%, right? There's other things that the company has to do to get things in order. Who honestly wears anything but Levi jeans and a Nike shirt? The thing about wearing Nike shirts is I don't buy them because they're expensive. Like I was at Foot Locker the other day and it was like $140 for a hoodie with a Nike logo on it. And I was like, what the like, I'm not paying $140 for a swoosh on my nipple. Like that, like, just no, dude. Like, we're not doing that. So I don't know. I mean, if I just don't think that many people care that much about the brand. Granted, I don't think the brand's dead, but I don't know if it's that enticing that you need the swoosh. Now, there's also no Michael Jordan left, dude. Like in the 1990s, Michael Jordan made wearing Nikes cool. LeBron doesn't really do that. And they don't have any superstars that are super exciting either right now. So not sure if that's the most interesting reason for it. Only buy Nike at outlets. Yeah, they're the cheapest at outlets. But in the actual store, it's like kind of expensive for no reason. I wear a $4.99 H&M shirt. Yeah, I mean, like I think a lot of people also go that route. Did you say swoosh on your nipple? Yeah, it's usually on the. It's usually on your nipple, bro. It's like it's on the side of this. Also, we just had a new Palantir presentation come out. We're gonna watch that at the end of the market close. It's by Jack Dobson. I actually got to watch it live. They never posted the video. They just posted it today, and it's about AIP, AI in supply chain. It's a really informative video for the longs on Palantir. So at the end of the market close, we'll be watching that video. It's like 15 minutes, and we'll watch it on the stream. All right, 4 p.m. Thursday, June 27th. The stock market is now closed. Markets are closed. Palantir ends the day at 25.24. Not bad. Nvidia actually down 123.99. Robinhood 22.59 up 1.26%. Bitcoin at 61,400. Carvana 132. GameStop at 25.09. So now all eyes are on Nike. This is going to be the one after the bell. This is the last major earnings we have this cycle. After Nike, we're going to talk about the Fed stress test because I got some more details on that. I talked about that a little bit in the morning, but we're going to talk more about it. And then we'll also talk about Amazon, which had an amazing day. Amazon tried to break out into the 200 level, but it got rejected at 199.83. Now at 197.85 on the day. So once it broke above 190, it was clear skies and price discovery for Amazon. Josh Brown on CNBC, he doubled his position on Amazon. I believe he said today Amazon is bussin', as the kids may say. So there you go on Amazon. All right, Nike. Eyes are on Nike. What's the result of the poll? Let me see what the results of the polls are. Nike is green after hours. What did you guys say? 67% say dumps. Okay. So the majority of you think Nike is going to crash. Let's see. So let's see on Twitter. We don't have results yet. This one might be a 405 one as well. So we might have to just wait until 405. But we'll see what happens. My Walgreens put just printed big today. Yeah, I mean, I had a friend who said they bought some Nike puts before this earnings as well. So we'll see if those print for people. Brian says fake dump first and then rips. Okay, that could happen. I thought that would happen with Micron yesterday. I thought there would be a fake dump and then a rip, but it was a fake dump, and then the dump just became less of a dump. Micron, by the way, Bank of America reiterated their 180 price target. Micron went to 132. Bank of America was like, no, this thing's 180. So if you believe in their research note, then Micron's a buy the dip. But Micron did not recover that much today. It just continued to kind of fall down after earnings. What else do we have? Does anyone own Nike? It's a dividend stock as well. How much is the dividend? 1.5. Yeah, dude, the dividend is 1.5%. There's not really that much growth. $142 billion market cap, like 1.5 billion shares outstanding. It's just not the most exciting company in the stock market. There's just so many other opportunities out there that can get capital. But it is down a lot year to date, and so a bounce would not surprise me at all for Nike. I feel like Nike's the stock people look at as soon. Like I remember getting Robinhood for the first time like 4 years ago, and I was like, oh, Nike's public, and you start thinking, well, everyone wears Nike, and like that's one of those beginner stocks. That and like Pepsi or Coca-Cola, you start thinking like, oh, these are really important. But then when you get into the stock market, you're like, well, these are household brands, but like stocks kind of suck. like I need some more Nvidia or Amazon or something, Amit was all the way, what's up, all the way from Mexico. I'm still in vacation. Amit, can you pronounce, dude, don't make me say it, Michoacan? Now I want to look it up. Michoacan, Mexico. Oh, there's an accent over the A. Michoacan. It's a Mexican state. How do you say Michoacan? Okay, I got it on Google. We got to see this. We got to hear this. How bad did I fucking butcher this? Michoacan. Hold on.
Michoacan.
Oh, I wasn't too bad, bro. Michoacan. I wasn't too bad. That was not too bad at all. Shit, I gotta pat myself on the back for that one. I almost got that. Okay, I think Nike's in a minute at 4:05, so we should be getting them soon, and we'll see what this candle looks like. Let's see. And yeah, Chewy ended red for the day. It was up at one point almost 23%. Now it ended red for the day. Still nothing on Nike, still waiting. Oh, wow, here's a good piece of DD. Let's look at this real quick while we're waiting for the stock. We got a green candle. Got some green. Got a little bit of green, a little bit of a head fake. A little bit of green. A little bit. Hector says if you pronounce Michoacan correctly, then you're probably gay, of course. What's Nike's PE? Nike's PE is 26. Yeah, I mean, well, if their growth is not that up there, then that PE is probably probably a little higher. Okay, so we'll get back to Nike in a second. Here's a good piece of DD on Nike. Here's the Google search trends since March 27th to now with Nike, Lululemon, Adidas, Hoka, and On shoes. Nike's up there, and it's above some of the others, but it's not as aggressive as some of the others. So that might be one thing to think about when it comes to if the consumer is still continuing to look into Nike. Also, by the way, Rivian fell 7% today, but then they recovered when they announced that Rivian recovered to like 1430 when they announced that their deliveries were 13,000 versus 10,000. The street thought they would do 10,000. They did 13,000. So they were down 7%. Then they ended up recovering 5%. Now they're only down 2% on the day because they showed that their deliveries are actually not as bad as what people thought it would be. So that's good news for Rivian. 5 billion and better than expectations on deliveries. That's not bad at all. And so Rivian shareholders at least getting to maintain that $14 level right now. Oh my gosh. I'm thinking Back to the Future 2 when Nike was relevant. I watched Back to the Future 2 a month ago, and it was good. I haven't finished the third one, though. The third one was boring, the first 10 minutes. I mean, the fact that I got through 1 and 2 is important, but the third one was just too much. Okay, Nike's not out yet. Everyone's waiting for it. People on Twitter are waiting for it as well. We're trying to see it. We're trying to see Tesla delivers on July 2nd. Tesla delivers on July 2nd. Will you be able to stream the debate tonight? No, I'm not going to stream it, dude. I'm not going to take the risk. I'm not going to stream it. I don't want CNN to nuke the channel. It's going to be annoying. So I'll be watching it. I'll give my feedback tomorrow. I really want to stream it, but I just don't want to take the chance, dude. CNN's being ridiculous with this shit, dude. Absolutely insane. But it's whatever. He watched the summary. Could you imagine, bro? What if I just watch all the movies you guys say I don't watch, but I just like watch the like reviews on YouTube? And I'm like, yeah, guys, that the Godfather was incredible. I summarized the like it was about the mafia, right? Like I just start saying dumb stuff about the summary, but like not actually understand the internals of it. I need to watch The Godfather, but the thing is 3 hours long, bro. 3 hours is so much time. It's hard to spend 3 hours doing it. Nike will get the Olympic 2024 boost. Yeah, I guess that'll be good for Nike. I mean, like, I don't know, dude. I don't know if those events are... Yeah, they're important. I just don't know if it's going to fix the overall brand problem that Nike has, which is that it's just not as exciting anymore. But again, I think it can bounce because it's been sold off a lot this year. I forgot the Olympic. Wait, like the actual Olympics are this year? Yeah, the last ones were in 2020, right? Where are the Olympics going to be? Are they going to be in Los Angeles? Olympics 2024. Where are they? They're in Paris. Oh, wow. July 26th to August 11th. Interesting. Paris. There's going to be a lot of baguettes being eaten in Paris. Okay, well, I think the 2028 ones are in LA. So those Jay-Z and Kanye will be there. Oh my gosh. Yeah, I'm not gonna watch the Olympics, dude. I don't care about the Olympics. Sports is just hard to watch. Where are these freaking earnings, bro? What are they? Why are they not out? Everyone's waiting for them. Nike, is it a 415 thing? Like, why is it not out? Is management just scared to press the red button and like push it out there into the world? Paris is located in Sweden. Oh, you think you're funny. Tomas thinks he's funny, huh? Think you're fucking funny, bro. You think you're funny for that. It's located in Europe. It's not Sweden. It's at 415. Oh my gosh, it's in 415. Okay, fine. So that means we have to wait a couple of minutes until we get that. Okay, so let's play the Tom Lee clip. Some of you guys might have missed it from the market open. Let's listen to him for a couple minutes, reiterate his thesis, and then we'll get into Nike in like 5 minutes.
Your year-end targets now.
We are, Carl. At the early December last year, we thought S&P could reach 5,200 this year, which at the time was almost a 20% gain. We've obviously moved well above it, and the fundamental picture to me looks stronger. I think earnings next year, we originally thought would be 260 for 2025. It's probably closer to 275. I think the war on inflation has been meaningfully better in terms of progress. I know there was a lot of dispute, but I think the last two inflation reports and the fact that 55% of inflation components are back to pre-pandemic levels means inflation is really going to fall like a rock. These are factors that give us comfort that multiples can expand. And so I think 5,200 is clearly too low, but I don't know how much above 5,500 there is into year end. So I think in a couple of weeks, we'll be addressing that.
You actually use a graphic of a falling rock in your charts to describe elements of inflation that you think are dropping. You said we're beginning to see insurances a break, waiting for shelter to follow suit. Some of your forecast, Tom, on new cars and used cars, do you actually think we could see that kind of deflation?
Yes, I think one thing to keep in mind is that there's almost 290 million cars on the road today. So when used car prices fall 10%, and they're continuing to fall, that's a meaningful amount of disinflation and may be painful for people who borrowed money to buy cars, but that is also saving people who are buying cars. And so I think there's a lot of goods disinflation in the pipeline, and especially with new cars, inventories have really been picking up.
Tom had a podcast with Bloomberg. I recommend people watch it on YouTube. It's audio only. And he gave a lot of analysis for why not only the S&P goes to 15,000 by 2030, but also some of the underpinnings of understanding multiple expansion along with earnings growth to be able to get that growth. And so I think he gave a lot of analysis on where true inflation is. And we got a green candle on Nike. As a result, he does think S&P can get closer to 6,000 by the end of the year. Okay, so we saw a big green candle for a second. Then it went down. We went to 94.48. You see the green candle right there. Then it bounced off. It looked like the terminal got it, even though it's 3 minutes early. It looks like the terminal might have got it. Just type in Bloomberg Tom Lee on YouTube and you'll find it. It'll be the first link. It's no video, just audio. It's a really good one on that one. Okay, so no Nike news yet. It should be out. It keeps that green candle keeps oscillating in between it. Okay, so let me do the bank news real quick. We still have 3 minutes and then we'll go back to Nike. So we talked about this in the morning, kind of. I want to give some further clarification on this because I read up on it today. So the banks just completed a stress test with the Fed. Now, what is a stress test? It is a regulatory exercise designed to evaluate the resiliency of large banks and financial institutions if things go south. Banks have to submit their plans about dividends, buybacks, all that different stuff in order for the Fed to review it to make sure that the banks can hold if something bad happens. So yesterday was the test, and despite U.S. banks being down $500 billion in paper losses due to issuing loans during 2021, the Fed said the Federal Reserve's 2024 annual stress test results indicated that large banks in the U.S. are well positioned to endure a severe recession and continue lending to households and businesses. Despite projecting substantial losses in a severely adverse scenario, all tested banks remained above the minimum required capital ratios. That's one of the most important things, demonstrating their resilience and their ability to support the economy even in challenging times. This was really important, bro. This was really important, which is why the banks had a good day today. If the banks continue to show momentum in the context of rates being high and their losses being high, but their earnings being also high and being able to still lend out capital to businesses and auto loans and mortgages and things of that nature, then when rates go lower, it's only going to help the banks. Like, it is a massive tailwind that help the banks if the banks are already performing. And hypothetically, if there was a massive recession, the Fed is like, yeah, they still wouldn't be that much underwater. So that leads me to believe Q2 is not going to be that bad, not only for the banks, but for the broader economy, because the banks at the end of the day kind of dictate where the economy can go. And if the banks are doing well, hopefully the rest of the stock market can also do well with them. So that was good news in the context of the stress test for the bank. All right, so we got 1 minute, and let's see what happens with Nike and what goes from there. Is Poshmark public? I don't think so. I don't think Poshmark's public. I think they're still a private company, but I think they're like a $1 billion startup, if I'm not wrong, or they got bought out for $1 billion. I don't think Poshmark is public. Poshmark, for those that don't know, is a website where you can buy and sell clothes, and you can like list your clothes on it and buy it and sell it immediately. Okay, we got a red candle. 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 We're down 2%. Now we're down, not down. Now we're green. Now we're green. Now we're green. Now we're green. Now we're up 2%. Now we're up 3%. Now we're up 4%. Now we're up 3%. Now we're up 4.5. Now we're up 98 on Nike. Now we're up 4.6. It's fighting. Now it's down. Now it's down. Now it's in the middle. Now it's 2 and 3. 2 and 3. Whoever called the head fake had it spot on, bro. Even if the head fake lasted for a couple seconds. Now it's 2%. Now it's going down. Now it's 1.8. Oh, if it goes red after this, dude. If it goes red after this, oh my God, it's losing everything. It's losing everything. It's losing everything, bro. Holy crap. Holy crap. Look at this move, bro. Look at this move. Look at this look at this candle fighting for its life, bro. We hit 98.83. Now it's at 96.50. Now it's at 96.50. Dude, that green candle doesn't look safe. Like if you asked me to bet on that green candle, I couldn't. There you go. It's red. It's red. Oh my God, it's red. It's red. It's red. Down 2%. If it goes back to green, this will be the craziest move on earnings I've seen. I think it's going back to green. Holy crap. Holy crap. This market. Goodness great. Now it's green. Yo, this is worse than a girl sending you mixed signals, bro. This is like, just tell me if you like me or you don't so I can move on. Now it's down 2%. Now it's down 3. What do you guys think? Do you think it goes green or red in the next 5 minutes? Do you think it sustains green or red? Now it's really going red. Now we're down 4%. Now, yeah, what are these shenanigans that like Wall Street's playing with Nike? Okay, what are the numbers? I don't even have the numbers. I'm just staring at the fucking candles. The numbers on Nike are EPS of 99 cents. They beat expectations of 84 cents. So that's good. They beat it by 15 cents a share. I did 99 minus 84 in my head very quickly. You guys should be proud of me. But revenue is 12.6 billion. They missed expectations of 12.8 billion. So they beat on earnings. They missed on revenue. And that's why we probably had all of that up, down, up, down, up, down, because the street was trying to figure out which one matters more, revenue or earnings. And it looks like they care about a revenue. And now we're down 4.5%. Now we're down 4.5%. Huh. That is interesting. All right, let me go to CNBC and see what coverage they have on this one. That was interesting, dude. Did not expect that one. I thought that was going to be straightforward up or straightforward down. And that was a hard one for the street to deal with. Okay, let's get into this one. Let's see. Wow.
Far from starting the easing process.
Mention it's now down close to 3%. You can't trust those initial moves. So that leads me to ask about the consumer, especially in light of what we got from the stress test yesterday and some additional concerns about stretched credit, particularly with those with mid to lower FICO scores. How much of a factor is that for you?
I think it is a factor, and it underscores that we're living very much in a bifurcated economy. The top half of the income distribution is doing really.
Look at Nike's website. When I'm on their IR website, they say Nike is a growth company. Who puts that on their investor relations website? I was about to say international relations. You guys are about to flame me for that. Who puts "we are a growth company" on your investor relations page? That makes me believe you're not a growth company, dude. And also it's white and it's hard to even read it. Like, who designed this thing? Okay, where's the quarterly results? Let's see. Investor news, quarterly earnings. Do we got it? All right, here you go. Full year revenues were 50. You guys can see this, right? Yeah. 51.4 billion compared to 51.2 billion, up 1%, dude. They are not growing. 1% is just not enough. Fourth quarter revenues were 12.6 billion, down 2%. Direct revenues for the fourth quarter are 5.1 billion, down 8%. Wholesale revenues were up 7.1 billion, up 5%. Gross margin increased 110 basis points to 44.7%. That's not horrible for sneakers. That's not horrible. Diluted earnings per share was 99 cents for the fourth quarter. Okay, CEO. We are taking our near-term challenges head on while making continued progress in the areas that matter most to Nike's future, serving the athlete through performance innovation, moving at the pace of the consumer, and growing the complete marketplace. I'm confident that our teams are lining up our competitive advantage to create greater impact for our business. CFO says, We are driving better balance across our portfolio. While we are encouraged by our progress, our fourth quarter results highlighted challenges that have led us to update our fiscal 25 outlook. Oh, they might have lowered guidance. We are taking actions to reposition Nike to be more competitive and to drive sustainable, profitable growth. Nike's now down 5% on the day as we get into after hours. Well, that's the story right there. Not enough growth. The guidance looks like it's coming down. They did put up $560 million of dividends this year. They bought $1 billion of their stock. They bought 11 million shares. That's good, right? In fiscal year 2024, they gave out $2.2 billion, up 8% per year from last year on the dividend. Yeah, I mean, it's just tough, dude. The growth is not there on Nike. It's just not there. Adidas is taking over. Maybe Lululemon, Adidas, all these little on sneakers, right? These companies that are kind of coming for Nike's neck here. It's tough. $142 billion company. It's tough to keep things going. There you go. Down 4% on the day. I wonder if the dip gets bought on this. Is this an algorithm dump? I don't know if this is an algorithm dump. I don't know, dude. I mean, like when you miss on revenue like that, I don't know if it's an algorithm dump. I think there was a little bit of confusion in the algorithms on which way to go. But if I'm not reading this wrong and they lowered guidance, that's also, market's gonna take a hit. It's definitely gonna take a hit with that. Let's see if we have more coverage here on CNBC, and then we'll keep going from there. All right.
Has the numbers, Sarah?
Hi, John. So it is a bottom line beat, perhaps why you saw an initial positive reaction. $1.01 is what is reported. The estimates were around 83 cents. However, it is a top line miss. So revenues missed. They were 12.6 billion. The estimate was more like 12.8 billion. But here's why the stock may be really reacting lower. In the release, and this is pretty unusual, Matt Friend, the CFO of Nike, says we are driving better balance across our portfolio. He also said our fourth quarter results highlighted challenges that have led us to update our fiscal 2025 outlook. We are taking actions to reposition Nike to be more
that feels like lowering guidance. That's what it feels like.
Competitive and to drive sustainable, profitable, long-term growth. They are alluding explicitly here to a guidance cut for the fiscal year 2025, which, remember, this is the fourth quarter, so that's when they look ahead. So expect to get more details on the conference call, but usually they update guidance on the conference call. Here, very explicitly in the release, they are laying out that it looks like they are going to be lowering guidance. Now, I did speak to some top executives at Nike about what those challenges are that is leading them to cut guidance and to miss on revenues. And here's what I can tell you. So what happened during the quarter? Well, the lifestyle business actually was a source of weakness. It declined.
Lulu. Looks like Lulu kind of gave them some competition there for lifestyle.
Think Air Force Ones, Air Jordan Ones. And the size of the performance business, which is more running and basketball, that grew double digits, but it wasn't enough to offset the decline in the lifestyle category. Digital was a source of weakness during the quarter. Digital sales were down 10% in the quarter, and that is a big reversal for Nike. According to top executives, they told me that there were challenges that started in April and May and continue there. And partially it's because these lifestyle shoes, the Air Force Ones, they're more represented in the digital channel than, say, in the stores, and that's why they saw weakness. The other point of weakness, which is leading to the lower guidance and the miss, is traffic in China, according to top executives, declined starting in the beginning of April, which is making the executives rethink the outlook for China. They tie it to macro concerns and issues, say that the space is very promotional across the marketplace, but they are noting that. As far as the overall picture here, look, John Donahoe, the CEO, is into a turnaround plan. He's about 1 year in. He made all sorts of executive changes. They have acknowledged that there's been an innovation gap in the marketplace. They started filling that in the performance space, the running and the basketball, and saw results and feel confident in those results. But clearly it's going to take time to work through and go toward the portfolio. The other feature that makes them confident, John, is that the wholesale orders, and I heard Seema reference this last hour, have been very good. The wholesalers are getting a 3-year pipeline view into the product, and they're optimistic about what they see, in part because Nike helps them grow the category if Nike does well. And so that's a reason to be optimistic. However, clearly Nike is acknowledging that there are challenges, and there were some surprises, including the digital weakness, I would say, in the traffic in China, and just what they're seeing in lifestyle, which is leading to this new outlook that I expect to hear a lot more from on the call.
The call being very important. Sarah, thanks, because this.
So there you go. I mean, if the lifestyle business is declining a little bit, if the digital business is declining a little bit, if the performance business is declining, China took a little bit of a hit. I mean, I think if stocks trade on narratives, we know this with PayPal. I mean, we know that if the narrative is not good, I don't know what the narrative is on Nike. Like for this to recover 5-6% tomorrow and bounce back up, what is the good part of this earnings that we saw outside of management is trying to figure out how to navigate all these issues? I mean, like that just means it's going to be stuck for a while. I mean, there's nothing really there. And again, the bigger problem with Nike is I just don't feel the world cares about them as much, even if the world is buying their products. And we're seeing the numbers, the world is buying other products. A lot of you in the chat said you buy Hokas or whatever that's called. I've never seen a Hoka before, but other shoes that, I mean, I wear New Balances. So like, I don't even wear Nikes. There are other brands that are out there, and it's a retail business with, not the best margins at the end of the day. They sell sneakers and like hoodies. So in a world where NVIDIA is ripping and generative AI is changing the world, I've been using ChatGPT for the past couple of days. I haven't used ChatGPT in like a month, dude. I started using it again. It got so much better in the past couple months, and like it's so useful. It's just like there's so many other opportunities to bet on besides a retail store like Nike or a retail brand like Nike. Hoka, that's what it's called. Hoka. Thank you for sounding it out, dude. That that really helps. That helps. Gymshark, I forgot about this. Gymshark's like $1 billion company, bro. Gymshark's doing its thing as well. So I'm beneficial, says Nike will be fine. Yeah, I don't think Nike's going anywhere. It's just it's one of those stocks where the narrative isn't that amazing. If you're long on Nike, then I guess you buy the dip and you keep holding on. But we do need a narrative retracing to happen or reversing to happen. And the numbers need to reflect that as well. Hoka, Tua. Yo, Hoka should use the Hoka Tua thing and turn it into a meme and integrate it with their brand. That would be smart, bro. That would be super smart. I've yet to see a company kind of take advantage of the Hawk Tua thing in like a sophisticated way with their social media team, probably because they're all scared to touch it. But like, I mean, I think it's good content. Could you imagine Palantir on their Twitter account says some shit about Hawk Tua? That would be crazy. You probably don't want them to do that, but like we need some of these like fun brands to take advantage of it. Like brands that aren't that serious. Like I don't know, what's a brand that's not that serious? Like a food brand or something. Like a Celsius. I feel like Celsius has a very Gen Z type of like if they said something about Hawk Tua, I don't think like corporate would get that upset at them. I think that would just be good marketing. Yeah, hot dog brand, Frank's hot dogs. They need to hop on that immediately, bro. That wouldn't be bad. That would not be bad. Okay, cool. So that's what we had on Nike. NVIDIA ended the day at 124.03, or sorry, 123.99. It's up a little bit after hours, 124.03. Robinhood 22.64 after hours. One quick thing on Robinhood. Let me show you guys this. I posted this on Twitter. And then after this, I think we'll watch that Palantir video I told you guys about. There's a new 16-minute video on Palantir about how they're using AI and stuff. It's a really good presentation. So I think we can watch that in a little bit and go deeper on that. So here's a message I got the other day. $354,000 transferred from Charles Schwab into Robinhood. And I wrote on this post, every time I see these pictures, I have to remind myself, 350,000 is a lot of money, bro. 350,000 is not a joke in terms of an entire platform, right? Or an entire portfolio that you're moving onto a platform. So this follower told me that they left Schwab because they were tired of paying 65 cents a contract because it was biting into the premiums on their OTM, FAR OTM covered calls. So Robinhood paid them $3.5K to get that customer. The data suggests gold subscribers are going to be depositing 2x faster than regular customers. I believe the 1% match is the most innovative approach I've ever seen to customer acquisition in the financial services sector. There has never been an approach where a company is giving you 1% sustainably. Companies have given matches, but they've canceled a lot of those matches or stopped doing it because it just didn't work. The unit economics didn't make sense. for Robinhood, they've innovated enough to do that. And so we're seeing that. Someone commented underneath this that their mom's boyfriend left Schwab and they put in $850,000 into Robinhood this week. So, I mean, I think these June numbers are going to be kind of crazy in deposits. There's a lot. I mean, the amount of stories I've heard, there's a lot of six-figure deposits starting to leave legacy platforms, and they're going over to Robinhood. You need to keep the balance of the transfer for 24 months in Robinhood to get it correct. So you need to keep that money, $350K in Robinhood for 24 months, and then you realize the entire 3.5K. Cool. So that's what we had in the context of Robinhood. Okay. So I want to play this now. If you're just joining, Nike kind of crashed after hours. I mean, down 5% is not that big of a crash, but it did take a little bit of a hit. So we're going to watch one video and then we'll go to Palantir. Here's one clip I wanted to watch about the breadth sort of debate about the economy. When does it broaden out, especially on a day where Amazon kind of hit all-time highs? So let's take a look at this video and then we will get into Palantir's big presentation that they put out this morning as well. Here we go.
For the first half of the year, and how does that color your view for where you think we're going to go from here?
Yeah, it's funny. We hold our big event this week. Trivera does. We had 25 investors in the room. It was sort of interesting. Everyone pitching ideas. Nobody pitched a short idea. It's interesting. In the past, that's been the case. And I'd say,
isn't that crazy, dude? Like, no one in the meetings he's in with hedge funds and Wall Street firms are pitching a short idea. No one's thinking of shorting this market, which shows how scared people are to go short on the broader market.
11 or 12 of the folks used a different valuation metric to justify everything from next year's earnings to I think somebody used an adjusted EBITDA in 2026 number, right? So people are really kind of starting. I came away thinking, wow, people are reaching for justifying the valuation to get their upside on some of these long pitches. It made me a little bit worried.
Wait, so that you had 25 people in the room.
Yep.
And it sounds to me like you're describing a, I don't know, overwhelmingly is the right word, but pretty bullish group.
People weren't as cautious as I thought they were gonna be, and that was one of my key takeaways. You know, my view is the financial conditions that we've talked about in your show for a year or 9 months, really since November of last year, being easy. That's what it says when you look at the Bloomberg number or the Chicago Fed number. When you talk to people on the ground who are, you know, in real estate or, you know, small business lending, it's a little bit tighter. Right. So the question is private credit going to fill that void? Are we still going to see easy conditions? I think the second thing we talked about a lot is margins. And most people are sketching out lots of stock ideas. They can see margin expansion in the second half of the year.
I mean, that's been a key part of your whole thing.
Yeah.
Okay. Your view has been colored since we've been having these conversations for the better part of 8 months to a year on the idea that margins are going to hold up. Right. And then stocks are going to do well as a result. That's been a key part of your thesis.
It is. And it still is. And I think, look, it's pretty tried and tested. Stocks where the margins go up tend to do well, and their multiples tend to expand. So I think right now, what do I think? I think financial conditions probably okay. Margins probably could come up. Estimates are a little bit too high. People probably lower in September. And I think the market can be okay. I don't think it'll appreciate in the second half of the year at the rate it did in the first. That's hard to sketch out another double-digit second half return. So I think we'll have some volatility in the late in the summer, but I think we'll end the year higher.
Are we going to be talking about the same kinds of stocks for the remainder of the year, or do we have a more meaningful broadening of this market? If so, what enables that to happen?
I mean, obviously the last month we've seen the narrow market again, the Mag 7 working. But if you look year to date, we've seen a lot of dispersion in every sector. It hasn't just been the Mag 7. We've seen, I think, every sector except for real estate's up. So there's been things to own.
And he is right about that. Outside of small caps and individual small caps like SMCI, MicroStrategy, they have performed. It has been a stock picker's market. Yes, small caps haven't performed, but for anyone who says it's only the Mag 7, like that's just not true. There have been, I mean, financials have had a good year. Plenty of stocks have done well and sectors have done well, even if it's not as broad as you would want it to be in a bull rally.
I sometimes go into these meetings, I do thinking like, what's the excuse everyone's going to use for why they're not keeping up? Is it going to be the concentration, narrow argument, or what's it going to be?
It's a reasonable argument to make. I mean,
if you're indexing,
it is what it is. You're in these stocks or you're not. And if you're not, you're hurting.
Right. If you're long only and you're indexed to the S&P, I think you have less of an excuse. Right. If you're at a hedge fund, it's hard to charge fees and then own them. So you got to carve alpha out elsewhere. And I think that's been harder. My general view, though, is that we're probably skewed to the upside still, just because I don't think we're going to see anything that destroys that dream of AI productivity. Most of my meetings, what people are saying is, when will we get frustrated that there isn't return on the CapEx investment yet for AI? Which are going to be the ultimate profit pool beneficiaries in AI? Is it going to be power? You've seen, VST and PWR rip higher. Is it going to be transmission and electrification industrial, Eaton high? Like there's stocks you can point to that have done well. So people are trying to figure out, do I just buy the obvious stuff because we're still in the first inning of a nine inning game, or is it going to pull back 30% and I'll get a second bite of the apple? So that's where my conversations about AI are generally centered.
And again, this whole productivity from AI and Meta getting all their ROI from the CapEx that they're spending, it takes time. Like if a company implements AI tomorrow, they're not going to, and we've already seen massive macro productivity shifts in the United States at the highest levels they've been in since the 1980s, but it takes time for like a company to implement AI throughout the entire enterprise and then to be able to see the results. And I think in the next year, we actually start seeing those results. And if earnings start going up, revenues start going up, operating margins start going up, costs start going down, then the AI promise will be realized. Now, let me give you a bearish point. I'm generally more bullish on the broader markets, and again, it's based on the inflation data I'm looking at, the macro data, the earnings data. One thing that made me pretty bearish about the whole AI thing today, and I'm curious what people think, but it did make me kind of either it's not bearish and it's a individually isolated stupid thing, or it's a sign of the times in the context of the sentiment around AI. SoftBank invested in Perplexity at a $3 billion valuation. And when I saw that, I was just like, that's weird, because Perplexity was worth $1 billion 3 months ago. It tripled in 3 months. I mean, I know Perplexity is a really cool search engine, but really? Now, what gives me some comfort here is I'm like, well, it's SoftBank. And SoftBank just throws around money like they don't care. So maybe it's not that big of a deal. But if it's the broader sector starting to pump this much money into AI names, a lot of these AI companies are not going to be legit. And so I don't know if Perplexity is worth $3 billion. Let's watch one clip on that, and then we'll finally get to that Palantir presentation that came out today.
This time it's SoftBank, the Japanese tech investor, backing the search startup Perplexity, Ty, at a $3 billion valuation. We've both experimented with it. Deirdre Bosa is here to break down the details for today's Tech Check. Deirdre?
Hey, Kelly. So Bloomberg first reported the details, but a source familiar confirms that SoftBank is indeed planning to participate in this round. It shouldn't come as a surprise. Masayoshi-san, we've talked about this, and his team has been saying for months now that they are going on the AI offensive, and Perplexity is really a darling in the space with the term sheet that already includes Jeff Bezos and NVIDIA. Now, SoftBank's participation, though, it does raise questions about the frothiness of Gen AI startups in the ecosystem. Last time SoftBank went on the offense and deployed tens of billions of dollars through the Vision Funds 1 and 2, it did so largely in late stage rounds, inflating valuations, many of which were ultimately unsustainable. Earlier this week, another buzzy Gen AI startup, Stability.ai, it has struggled with executive turnover and mounting costs. It was able to find a lifeline from a group of investors, including ex-Facebook executive Sean Parker and Coatue Management, a crossover fund that, like SoftBank, many traditional VC investors consider to be Silicon Valley outsiders. That is coming in at later stages to inflate those valuations. So this space is as hot as ever, Kelly and Tyler.
And again, it's not that Perplexity is not a good company. For those that don't know what it is, it's like an AI search engine. It's essentially a wrapper for ChatGPT, but that kind of minimizes it because it does more than being a wrapper. I mean, let me show you a quick example right now. Let's ask a question. What does Palantir do? I have cap locks on, of course. So you get sources, you get Reddit, you get videos, you get a summary right here. You get some more questions. I mean, look, dude, I know a lot of people love it. It's not the most impressive to me. It's not a bad product, but $3 billion, and they don't do advertising. They make you pay like $240 a year. I mean, how many people are going to pay $240 a year to use a search engine when ChatGPT is now free with Siri and Apple's AI coming out? I can't imagine. I doubt they're even doing a couple $100 million in revenue. So like $3 billion was a lot. And so I didn't get that one. That made me kind of scared and made me feel that there's too much money getting flushed. The reason I've loved this rally this year is because I felt it was a rally that was not hyped up by exuberant amounts of money chasing opportunities for the hell of it, which is what happened in 2021. And this deal today made me feel like it was a little bit too intense. But then I remembered it's SoftBank, and SoftBank just puts money in anything. So maybe it's just like a SoftBank thing that they wanted to get exposure to more AI. Okay, cool. Let's do the Palantir video. So Jack Dobson, one of the guys that presented 2 AIP cons ago, he created a 60-minute presentation. They recorded this at AIP con, but it wasn't live. I and Arnie actually got to watch him perform this live. It's all about enterprise-wide integrations with making data-driven decisions using AIP. So it's been about 3 weeks since I saw this presentation, so I did forget some of it, so I'm going to be watching as well. 16 minutes. This is for the longs on Palantir. If you care about this, great. If you don't care about that, that's all right as well. This is basically the end of the market close, and now we're going to finish up with this Palantir presentation today. Palantir right now, after hours, is at 25.24. Okay, here we go. Here's Jack Dobson for the next 16 minutes.
At Palantir, Jack Dobson.
Good afternoon.
He was basically looking at me. It was me and Arnie. It was an empty arena, and we were just looking at him. He was like, good afternoon. And me and Arnie are like, good afternoon. And we're just sitting in the audience.
I'm Jack Dobson, commercial AIP lead here at Palantir, and I'm so excited to welcome you back to AIPCom. One of the founding tenets of Palantir is driving decision-making at the front line, whether it's the front line of the Ukrainian defense, empowering the army's warfighters with Titan, or the front line of manufacturing, the hospital ward, the construction site, and beyond. One thing is common across all deployments of Palantir: our customers' ambition to not just unify data or enhance visibility, but instead to fundamentally redefine decision-making at the operational level. Across government and commercial, these are some of the most time-sensitive, mission-critical operational environments where privacy and civil liberties are of paramount importance. We've been powering institutions in these environments for 20 years, and the same can be said for AIP. But what does it actually mean to deploy AI to your operations? How can AI actually drive higher quality decision-making? Well, let's start with the set of AI tools you may be familiar with today. In reality, the concept of AI is nothing new, but the advent of these large language models and the consumer-facing explosion of this technology has redefined what we mean by AI and the opportunities it presents. But here's my take. We've all been fundamentally missold a technology as an interface. We're all very familiar with the chat experience, and there's no denying it's an intuitive, natural way to interact with data and existing platforms. But this very quickly breaks down. These features work by drip feeding my context to these models. And while this can be very useful, we can't drip feed my entire enterprise. My enterprise is also not just text and tables, it's also logic, decisions, and the experience of my operators. And even as we extend this to multimodal capabilities where models can operate on more types of data and take a greater variety of inputs, we're still fundamentally constrained by the human operator. We're giving our people better tools, but we're not fundamentally improving the methods and the velocity of decision-making. So what if we instead bring the models to the enterprise, not selectively providing context to these models, outsourcing bits of my context, my enterprise, to an endpoint, but instead infusing our operations with these models, empowering our operators beyond just additional tooling and fundamentally transforming the way that decisions are made. So let's break down that decision-making process and see where AIP can begin to transform it. At their foundation, any decision can be broken down into the data and the context used to inform it, the reasoning and the logic that turns that data into a prediction or a recommendation, and the actions that enact the necessary changes to turn prediction into reality. And looking at that basic AI tooling, decisions which ultimately shape the business, they're being assisted, maybe even sped up to some capacity, but we're still hitting constraints. Giving 100 users the ability to chat with their PDFs, you're still dealing with siloed processes, disconnected context. And when it comes to making a decision, well, making a decision in reality means updating the multiple systems, applications, and dashboards that need to reflect that decision. So the alternative, we break AI out of this traditional tooling, infuse AI at every step of the process and fundamentally change the way that decisions are made. Your human operators are still incredibly valuable. Let's not limit them to asking questions and interfacing with chatbots. Instead, AIP proactively gathers context required to inform a decision, irrespective of the source system and the technical complexity. Then AIP logic proactively interprets and reasons with this data based on logic that you define to come to a recommended action. And then, either automatically or with human approval, the required actions are orchestrated across systems and workflows that need to be updated to ensure your operators are enacting the optimal decision. This enables higher quality decisions informed by better context and more dynamic tooling, with greater capacity and throughput enabled by automated AI agents, proactively supporting your operators. This is decision-making redefined.
And again, all of that only makes sense if you have an ontology. And that's kind of Palantir's core point. That's the message they're trying to get across. It's like AI agents that aren't connected to the logic and reality of your business, meaning your business data, are worthless. And that's what a lot of SaaS companies are trying to sell to the enterprise.
And we're beyond the point of even talking about first movers. Many global organizations are already setting and repeatedly raising the bar for AIP. Within supply chain, Eaton, a major manufacturer in the US, manages inventory across 300 sites, 32 million parts using AIP, which dynamically recommends substitutes and solutions to shortages based on context scattered across over 70 ERP instances. They've seen a 25% productivity increase in just the first few weeks of their AIP deployment. And then Fujitsu, joining me on stage at AIPCon, alert systems and demand forecasting powered by AIP resulted in an annual cost reduction of over $9 million in just 3 months of work. And across healthcare, nurse scheduling, treatment optimization, and invoice management, all accelerated by AIP. Also taking to the AIPCon stage, Tampa General Hospital, they've seen an 83% reduction in patient placement time. Then across broader operations, over the last 3 years, Sompo have seen a $60 million improvement in profit, expecting an additional $100 million improvement through building with AIP. And then building the future of infrastructure with Jacobs, we've seen on this very stage how AIP mixed reality is fundamentally transforming how decisions are made on the front line. And then beyond, workflows that hit every enterprise, serving customers and transforming internal processes. At CAS Investments, they've reduced their new lead processing time by over 90%, enabling them to handle 100 times the number of leads with the same number of resources. That is transformative business growth powered by AIP. So let's recap the state of the world today. My operators have valuable tools for accessing and interpreting data, but how does that actually map to decision-making? The fundamentals remain the same. A web of teams and operators working with disconnected context and tools, enacting decisions across siloed systems, losing all traceability as to why a decision was made, and more importantly, whether or not it was even the right one. Adding more AI to the mix only adds to the chaos. If my human operators can't make sense of this landscape, how will my AI chatbots and co-pilots? So let's leave chat behind and instead look at how AIP transforms decision-making in my organization at every layer. Of course, it starts with data, but remember, we're not drip-feeding context and bits of my enterprise to these models. We instead build a data foundation which we can infuse with AI. This is our ontology. AIP Pipeline Builder allows me to use both LLMs to build out my pipeline by simply describing what I'd like to do with my data, but then also inject AI into the pipeline itself to process data with an LLM of my choice. This is AI as both the co-pilot and the engine working in parallel. In just a few clicks, without a line of code, I'm injecting LLMs into my data pipeline to, in this example, perform semantic chunking, breaking large documents into sections with the context of the workflow that I'm building. That way I can serve more concise, relevant context to downstream models and human operators to inform decisions, rather than just passing them hundreds of documents to sift through. And then finally, we build the output of this process into that ontology, becoming a foundation on which we can build applications and workflows and enterprise logic. So let's start off with that logic layer, the kinetics of decision making. AIP logic allows me to build LLM-powered functions that can orchestrate AI agent operations across the platform, connecting not just the data of my ontology, but also my enterprise logic and actions, enabling full spectrum automation. This allows me to move away from waiting for user input and asking questions, instead instructing AI agents on how to operate against the context of my enterprise. And alongside those instructions that I provide to my agents, I also provide tools to augment the LLM's capabilities and further connect it to my enterprise. These tools allow the LLM to query my ontology, accessing real-time context, but also perform custom functions and actions that are unique to my business. I can inject external logic in here too. I can have an LLM run ML models, forecasts, maybe even other LLMs to perform more complex, context-specific tasks. And all of this built on a platform that can dynamically switch between commercial, open source, and custom models with just a couple of clicks. Seamlessly switch to cheaper, faster models as they become available, and then optimize for cost and performance by building KLLM workflows in just a few clicks without a line of code.
And when he means KLLM workflows, I think that's a really important thing, because to have a workflow, meaning there's an operational use case of AIP on only GPT, but then you switch the model for whatever reason, and then that workflow collapses, that's bad. Like, that means you're stuck to one model. And obviously with the hypersonic changes in models, Claude 3.5 came out and people are saying that's better than GPT. You need a diversity of models. The other thing is when governments need to have particular regulations and governance over the models that they're using, if they're integrating AI into whatever agency that may be, that's another reason why you need something like AIP.
And of course, logic isn't just for building. I can also test, debug, and build my intuition around how an LLM is interpreting my prompts, allowing me to iterate and improve before releasing to production. Then AIP Automate allows me to take my AIP logic and seamlessly set it up to trigger based on a variety of criteria that I define, with the resulting actions either requiring human review or being executed automatically. I always maintain that granular control. Dynamic retry settings ensure I always have a safety net for my high-frequency automations, and then batch executions allow me to quickly deploy a new logic automation across hundreds, thousands of inputs from my ontology. So logic enables rapid LLM deployment, with Automate quickly scaling this across my enterprise. But with that increased scale comes the importance of version control, testing, and evaluation. Well, the answer to this is AIP evaluations, a comprehensive suite for testing and evaluating LLM functions. Evals allow me to test my logic at scale across a variety of structured and LLM-backed evaluations, then also monitor these in production to see ROI and iterate on the performance of my functions. Evals provides both the guardrails to safeguard my LLM operations and the means to rapidly improve upon my deployment. So we have our data foundation and the logic wielding that enterprise context to drive processes. But the human in the loop remains critical. Therefore, we need a decision-making front end. Workshop allows me to again leverage that ontology instead now as building blocks to build operational, user-facing applications.
And this is the most important thing, dude. This is where everyone's fears about AI automating, everyone's jobs away. It's like, yes, that'll happen to some extent, but Palantir and Carp has been clear about this for the past 3 years. Their goal is not to get rid of people in factories or companies or manufacturing warehouses. Their goal is to empower them using AI, which is a very important philosophical top-down point of leadership from the company. If they wanted to automate these jobs away, this software would not be designed the way it is. The reason these are user-facing applications for non-technical people powered by very sophisticated technology is because they actually believe in AI having a symbiotic relationship with the worker versus an antagonistic relationship with the end employee.
Allowing operators to review the output of our AIP logic and approve or feedback on recommendations. Workshop allows me to go beyond just dashboard and instead build operational applications in just a matter of clicks, again, without a line of code. And then those AIP integrations allow me to tightly couple my operational applications with my enterprise logic, enabling human AI teaming on the front line at scale. But in your organizations today, how many of these decisions are being made purely based on experience or tribal knowledge? Data that's not captured in any source system or even in note form. This data exists purely in the minds of your operators. Well, for the first time, we can now actually capture that context and operationalize it with our AIP agents, establishing a feedback loop back to the AI, compounding upon the data asset and improving our processes with every decision. This is governed feedback loops with AIP. Operator feedback and actions resulting from an AI recommendation is captured in the ontology, allowing us to build workflows and logic on top of it. So now, instead of blindly feeding this context back to our agents, now we can review and control this feedback, ensuring that only good practices are fed back to our logic via those ontology tools. No retraining required. So for the first time, I'm managing enterprise tribal knowledge like code, allowing me to operationalize and govern context at scale. So we've built an AI-infused data foundation, evaluated and automated our custom logic, provided front-end workflows for our operators, and established feedback loops to compound upon all of this over time. But the final step, how do we actually enact these decisions? Orchestrating the myriad of actions across my data sources to keep everything in sync. Well, my actions are all set up with webhooks. I can now write back to SAP, Salesforce, any system that needs to be updated with the result of my decision. And most critically, AIP is updating those systems of action, the sources and applications that my operators are interfacing with on the front line on a daily basis to inform their next step. Actions become the connective tissue of enterprise automation across all systems and all platforms. And these actions are the same actions that I can integrate into my AIP logic. All of the tools that my human operators are using today can be seamlessly made available to AIP agents as well, without any additional configuration. With just a few clicks, the scale of my enterprise autonomy is increased exponentially. This is the Palantir standard architecture for AI-enabled decision-making at scale. This is how AI orchestrates and accelerates the enterprise. And the art of the possible has never been closer. Build with AIP now gives you all of the tools that I just ran through, combined with builder components, apps, and workflows, just one click to install. Building your first AI product has never been easier, so what are you waiting for? And of course, the experience doesn't just end there. To take your new workflows to new heights and get hands-on with Palantir engineers, book your AIP bootcamp. There's a reason that we've run over 1,400 of these globally. We've seen everyone from operators to architects to CEOs come together at a bootcamp to build the bleeding edge of AI in just a matter of days. Every workflow you've seen on this stage started at a bootcamp. All you need is a date to get started, and we'll handle the rest. So this is everything you need to deploy operational AI workflows, building on a platform that's designed to adapt as the models and the underlying technology improves. You all have the unique opportunity to build the bleeding edge. And if you're not building, you're not winning. So let's get started. Thank you very much.
Yo, Palantir's going to the fucking moon, bro. We're going to the fucking moon. This is incredible shit, dude. And it's like, again, I simply feel that other enterprises are not taking that stuff that seriously. So a couple key takeaways. AI Money here says in the chat, one of the key elements to what Jack talked about in this video is that there's no retraining required. And that's the power of the knowledge library and retrieval augmented generation in the context of your ontology. The LLMs that are already trained, Claude, Gemini, GPT, whatever they may be, they need to be connected to something that is the source of the understanding of your enterprise, which is the ontology. That ontology requires you to not have to train a model, which is what fucking Snowflake is doing, which makes no sense to me. I still don't understand why they're doing that. Whereas Palantir is saying, wait a second, but you're never going to beat GPT or Gemini or Claude. Like, they have too many resources. They've been at this for too long, but you do need an understanding of your business data. And by the way, having a trained model that gives you, in the words of Cart Poetry, is not valuable. BP, Airbus, Tampa General, Eaton, the Voyager today, Starlab, those companies that actually care about having an analytical operating system for their enterprise, they need an ontology. And then these AI agents that Jack was talking about, undergirding the foundation of how that ontology drives business outcomes, that is where all the fucking value is. That is where the hundreds of billions, if not trillions of dollars of value is. At least that's what I believe where the value is over the next decade. And I think Palantir is going to be one of the companies that takes advantage of that. And so it's going to be very, very exciting to see how that plays out. The link to the video, I'll put it right here. It's on Chad's Twitter. So it's not on their YouTube. It's actually on Chad's Twitter. So this is, you can go to his Twitter account, and then you can see the video right there. So I thought that was important. I also thought the KLLMs was really important. Clive says, how can you say so much without notes? Dude, well, that's hopefully why the streams are valuable, is because I can condense information and I don't really need to take notes. I can try to, use my understanding of what I condense to be able to then regurgitate something that hopefully makes sense and analyze it and crystallize it and break it down, which is what I wanted to do on the stupid debate tonight. But CNN is going to sue me or block my channel if I do that, so I won't be able to do that. The other point I was trying to make is, now I forgot what point I was trying to make now. The other point I was trying to make is the argument about KLLM. So I thought what was really interesting there, and it kind of hit me just now as I'm watching it, it's like, yeah, if you build an operational workflow tied to one model and it's not able to be transmitted to another model, then that operational workflow falls apart. And so Sham talked about KLLMs more than a year ago, and we were all kind of introduced. And it goes to show you the forward-looking thesis that Sham had as the CTO of the company back in June of 2023, which was like, hold on, wait a second. All these models are going to be commoditized. In fact, he did a podcast with Kathy Wood back in September, and the argument that he told her was that all the models are going to be commoditized. And Kathy ended up, agreeing with that thesis. That's when she started buying back into Palantir. But his argument was like, if all the models are a commodity, then what makes the commodity less of a commodity is the value of your organization. And the value of your organization needs to be integrated to that end commodity. Now, it's not to say OpenAI is not going to, I think OpenAI is going to be a $1 trillion company, but it's not to say the models are delegitimized because they're a commodity. It just means that there is such a cutthroat arms race for being the best model that there's going to be 2 to 3 winners. And then the rest is going to come down to how do those models actually create value. Right? Like, that's the big thing. I stopped using ChatGPT. I told you guys for the past month just because I've been so busy. And, I was thinking of canceling my subscription the other day at $20 a month. And then I started using it again. And I realized, dude, I can't cancel this thing. Even if I don't use it every single day, this is so valuable that it's almost hard for me to understand if I could cancel it. On the Daily Palantir account, I don't know if you guys follow that account. If you don't, you should follow it. We use a platform called Opus to cut videos. So Daily Palantir, this is the account. So like this video right here, we cut a clip of Sham Sankar's recent keynote, 1:26. We didn't actually have to edit this video. We went into Opus, we posted the YouTube link. They have their own custom LLMs. They found the best moments of the broader YouTube keynote for 20 minutes. They cut it up. We gave them the specific requirements. And then boom, we've got 10 pieces of content that we can post over the next couple of days from Sham's keynote on that account. That's one example of AI making that account more productive, because it gets to put out more content, more good quality content. And we pay that software $100 a year, which is nothing in the grand scheme of the production that we're getting. So the point I'm trying to make here is the end use case of AI is where the trillions of dollars are unlocked. And for Starlab and Voyager Space today, they said, we think there's AI in the commercial space opportunity that we're trying to tackle. And so we want Palantir. For BP, they think it's in oil. For Eaton, they think it's in manufacturing. For Tampa General, they think 7 years, 50 million, it's in healthcare. And the Palantir thesis is that over the next few years, there's going to be a lot of people, a lot of companies, a lot of industries that realize if they don't have AI, they're not going to be competitive. I mean, even a more tangible example. So I said this example yesterday on the Palantir Daily episode about Sham's keynote, but Tesla is one of the best manufacturing companies on the planet, and they do it in the United States. They don't outsource everything to China and Japan, because they use software to define their production, meaning they're vertically integrated and software is at the forefront of how they create vehicles. I'm assuming as well, machine learning, AI, all of that is integrated into their supply chains, their workflows to be able to produce a car, and they have the best margins in the world on their car, even though their margins have been decreasing, not only because it's EVs, but because they use software at the forefront. I believe, and that's why Palantir got the Panasonic deal. Panasonic works with supplying batteries to Tesla. Why does Tesla use Panasonic? Because Panasonic is efficient at getting the batteries that Tesla needs to fulfill their demand. Why is Panasonic using Palantir? Because Palantir makes them efficient, at least in the Sparks, Nevada factory and potentially in the Wichita, Kansas factory over the next 3 years, because you need a digital smart factory going into the future of manufacturing in order to deliver outcomes. The point I'm trying to make is that outcomes of AI is where the value is. And if your enterprise needs to produce outcomes for your share price and your earnings to reflect the value of AI, then the question is Palantir going to be providing that value? And I think they will over the next 5 months, which is why I'm betting on Palantir. And I think Jack did a really good job explaining why Palantir likely will be providing the overall value to enterprises to unlock the AI use cases that make those companies more productive and ultimately makes them more revenue. Chris says, I agree and disagree. I bet LLMs will be a commodity and that there will be hundreds of LLMs. We'll pull a niche LLM into AIP, what I think of as a smart box to build insights and add our data and then magic. Yeah, I think so as well. I think the core thing, though, is that GPT and like even Perplexity, right? Perplexity is built off of GPT. So it's not literally a GPT wrapper, but it kind of is. I think a lot of the startups, GPT, the OpenAI put out some news today, or I think the information reported that OpenAI is selling more API requests via GPT than Microsoft is selling via Azure AI Cloud, which is insanity if that's true. And so there are going to be some core winners in the context of the models. The question is simply going to be which of the models are going to be the ones, that win, even if we have hundreds of models, because I think some of the core models will probably get the lion's share of the outcome. Say again. Yeah, that was the news from the information that GPT, OpenAI selling more of their own API requests than Microsoft is doing for them via the Azure cloud. Meaning that clients that have Azure cloud are using less OpenAI API requests than just people going directly to OpenAI, which is just crazy, dude. It's just absolutely crazy. So the overall point is, at the end of the day, if Palantir is going to be the platform that creates the operating system for an enterprise to unlock the value of AI, which is why I think Karp keeps talking about chips and ontology being the byproduct of all these chips. What does chips basically mean? It's a metaphor for training models. Models means you need an ontology to be connected to it. That's what Jack talked about for 16 minutes. If you didn't understand it, I would watch it again, because if you're a Palantir shareholder, you've got to understand what those 16 minutes means. And from my understanding, I believe those 16 minutes sum up to a business needs an ontology, and this is not new. We've all heard this before. And that ontology unlocks value, and if Palantir can capitalize on the market opportunity, there's going to be a lot of value for companies, which means a lot more growth for Palantir. Okay, there you go. That's what we got on the Palantir video. Now, there's one more thing we got to talk about. There's one more thing. I got one. I'm like Apple today. We have one more thing. Okay, so this is not about Palantir. This is about something else. I watched the video today. Okay, it's a 4-minute video I want to play for you guys. You guys are going to hate me for this. Like, you guys, the amount of jokes I'm going to get is, I'm ready to take the jokes because I'm seriously thinking about it. And I wish, it's a stock. Okay, it's a stock. And I wish I got more serious about this stock at $8. I really wish I got, because it's such a no-brainer in my mind, this stock at $8. Stock's now $12. And I'm starting to think, what if we go long on this stock? Like, what if like I haven't initiated a position, but I'm thinking, I'm doing the DD literally, and I think there's something here. It's not Robinhood. We have enough of Robinhood. It's another stock. You guys are gonna make fun of me, dude, but I really do think there's something. This would be going long, no options. This would be, I think, like a double in the next 3 years or something, if it plays out the way I want it to play out. I could be totally wrong on this. No position yet, but I'm thinking about it. Dude, why are we not thinking more seriously about I'm trying to pull the ticker up before I say it, about Grinder, dude? Like, I know the jokes are going to be there, okay? I get the jokes are going to be there, but it kind of makes sense when you think about it. It really does. So I'm going to play the video, listen to the CEO talk, and then give me your thoughts after. All right, here's the CEO.
The world's biggest LGBTQ dating app updated its guidance. The stock's surging more than 15% on the news, adding to its yearly gains. It's up more than 35%, far outpacing competitors like Match Group and Bumble. Joining us here at Post 9, Grindr CEO George Arison, who rang the opening bell this morning for Pride Month. Happy Pride Month.
Thank you.
Good to see you.
Good to see you too.
So the numbers were judged to be aggressive in a good way by the street in terms of growth, 20 to 25%. What is making you feel so confident?
We had a really great week. This was Grindr turned 15 this year, and we wanted to do an investor day in June for Pride Month, and I think it worked out really well. Obviously, we did raise our guidance for this year as well. We went from 23% or better to 25% or better for the year. And then gave long-term guidance of 20 to 25% for the next 3 years. We have a really amazing business and a super engaged user base that really loves the product. And we have a lot of white space to build things for them to make the experience even better. So I think that's what makes us really confident in being able to continue growing.
Where is the user?
So the first part of the thesis is the engaged user base. If you're betting on products that are sticky and that have a moat, Tinder, Bumble, Hinge, those products aren't the same as Grindr because they don't have the user base that Grindr does. They have bigger users in terms of millions of users, but the types of users that are attracted to Grindr, they kind of exclusively come to Grindr.
Growth coming from? Is it coming from other dating apps or is it bringing new people?
Grindr always gets as people turn 18 or finish college and kind of try to, come to them, be themselves and come out, etc. Grindr has always been really good at attracting those users into the app, and that has continued to be the case. So while others might have challenges with younger generations, we've never faced that, and our MAU keeps growing both here and internationally. Think
about that. He says we've never had problems with user growth because when people get to college, and that's when people, I guess, kind of figure out, if they're gay, bisexual, all that stuff. Grindr is like the only place, as Philip says, it's kind of a monopoly on accessing same-sex relationships. And so their MAUs keep growing without increased customer acquisition spend. I have to go through their financials to actually see the marketing that they do. But if the sales and marketing numbers look good and the MAU keep going up, they're only going to get more subscription revenue. And this is going to be a growth stock, I think, over the next couple of years.
The amazing things that's happening in the world is that acceptance is spreading from the US and Europe into many other places. Like Thailand approved gay marriage just last week, which was obviously a huge step for East Asia. And I think that's going to continue. So we're seeing a lot of really great growth with users abroad in Latin America and Asia and elsewhere.
There are some who argue that there are threats to acceptance in this country, whether that's policy or just culture. Does that put a limit on growth, or is it a threat to growth?
I think there are definitely threats to that. I mean, not just for us, but for everybody. There's always a fight between freedom and not, right? I was born in the Soviet Union, and I know what not being free is like. And also, we are here, in the cradle of our free society in some respects, and I know what that feels like as well. And I'm very much on the side of the latter than the former. I think the way you kind of respond to that as a company is by being really successful. The more successful we become and the better.
I like that answer, dude. I like a CEO who says, fuck everybody else. We're just going to win. We're going to create the best product.
We do for our users and our shareholders, the more power we gain, and we can have a bigger impact on the world. And that's what we're focused on.
Is there evidence that this community is more engaged than it would be if it weren't a different community?
Of course, because our users have special needs, inevitably, because we are a small percentage of the population. We are frequently underserved by other brands and other companies. And so when you have a product that is specifically catered to them and has been doing a really good job, I think, for the last 15 years in serving them, the engagement is very high. I mean, for a lot of people, Grindr is one of the 3-4 apps that's always on their home screen because they really care about what the product offers.
AI threat or opportunity?
Oh, it's a huge opportunity for us. And we are working it into our product roadmap in a significant way to make our products better for users with AI, obviously always with their consent, but there's so much we can do to make it better. Relationships are all about using data to match people, and AI is fantastic for that.
I don't know, man. I mean, what do you guys think? I don't have a position yet in Grindr, but I think there's an argument there. I absolutely think there is an argument. And, you can in general, you can, if you're not a fan of the LGBTQ dating space, then whatever, right? If you don't philosophically agree with it, then whatever. But I'm just thinking of growth. I'm thinking of product experience, and I'm thinking of highly different, like I would not buy Tinder or Match Group or anything, because like dating apps in general have not been the most exciting business. Grindr is not just a dating app. It's one of the only places where if you are gay, you have a platform to access, which is why when you're figuring out your sexuality, that's like number one for you. Like me as a straight man, even though some of you guys disagree, and I'm definitely not helping my case with making this argument right now. I have Hinge, Bumble, Tinder. There's a variety of different, there's Plenty of Fish, Coffee Meets Bagel, all this shit that's out there that I can use to access potential relationships. Whereas if you're a homosexual, there's not that many. And if Grindr's top of, it's kind of like if that's the only thing that people think of, if they're in that niche, then I don't see how Grindr doesn't keep growing. And the CEO basically said that in terms of them not having to worry that much about customer acquisition because they're able to continue getting customers because of how niche they are. Let's real quickly go through their deck. First of all, let's look at the stock. The stock itself, Grindr stock, it went public in 2021 at $10. At one point, it got up to $36. Right now it's at $12. Year to date, it's up 43%. Over the past year, it's at $134. I really wish I looked at this stock at $5, dude. Because this was not a stock, I think, that was a meme stock at all. This is a legit company. You know, I don't really know that much about the financials fully, but in terms of I should say a legit product versus before I say legit company, it's a legit product. It's, you know, I also don't think it's as commoditizable. Like Tinder can't just add like gay, or Hinge can't just add gay. Those are totally different product experiences. And I think people are missing the point of the product if they just say competition can take them out. And competition hasn't taken them out because they're obviously growing more and more and more. So I think there's at least all these arguments. Douglas says, do all these sites not have I am a man looking for a man? All these sites do have that. However, there is a certain experience with Grindr that is fundamentally built for that population, which is different than you know, just like the basic apps adding that to their thesis. Again, I'm not long on this yet. I haven't bought it yet. I'm just spitballing. I'm brainstorming, right? I'm trying to conceptualize. I might end up not going long on this. Like we thought we were going to go long on Rivian, didn't happen. We thought we were going to go long on Path, didn't happen. I just saw this video today and I was like, if the global population is going to keep getting gay, which, I mean, you could bet a certain percentage of them are going to keep being gay, they're going to need an app to connect. And it seems like that's what's for Grindr. So what makes Grindr unique? Built by gay people for gay people. Open architecture enables the user to see and message everyone around them. Our biggest strength is our users. 52% gay men in the US have a bachelor's degree. 50% more have an advanced degree than straight men. Oh, wow. They're making the argument that gay men make more money than straight men. That's a hell of an argument. This is why I love doing DD on companies, dude. You find all these interesting ways the companies think about their users. Male couples make 128,000. The total population makes about 75,000. Interesting. Our engagement is extraordinary. Nearly 1 hour average time spent on the app. That's a big deal, bro. In a world where every app is fighting your attention, to get 1 hour from your users on average. 121 billion chats sent in 2023. 2.6 billion albums shared in 2023. 500 million locations sent. Our brand is powerful. Our future. They want to use advertising and international as the growth lever. So that means basically expanding. For example, Thailand just legalized gay marriage. Strong culture and AI will help us unleash our full product potential. Okay, so there's an AR argument there. We're a culturally driven organization. Our users are number one. To build the global gayborhood in your pocket. Oh my God. And through our success to make a world where the lives of our global community are free, equal, and just. So look, the whole social mission of this is not why I would consider investing. I care about how much growth they're having. And I'm going to go through the company more in depth later. If they're having more growth, dude, like there is an argument to at least look at Grindr. There's an argument to at least look at Grindr. So there you go. What gayborhood do you live in a bit? That's an interesting term. But the point is, I think there is an argument. I think there is an argument here. And I just care about making money, dude. I care about making money. If this app is going to grow and the world is going to be using this app for this specific niche, where's the market cap of Grindr as well? I think it's like 3 billion, I'm going to guess. Grindr, 2.1 billion. Price to sales of 7. I don't love that. And that's because it's up 40% year to date. Let me quickly look at their revenue. What's Grindr's revenue? I'm going to guess they're doing 200 million a year. I'm going to guess. That's like a straight guess. Grindr, GRND. Grindr is doing in revenue full year Yeah, I was right. 253. Wow. So last quarter they did last year they did 253 million. Okay. They're not profitable. They lost 55 million last quarter, but they were profitable 2 quarters ago. So maybe there was a one-time charge or something that happened in 2023. They do have okay, yeah, I don't like that. They have 325 million in debt. I don't like that. That's not good. Why do they have so much debt? What the fuck is going on there? That's a lot of debt. That's weird. So that number doesn't look like nice. Shares outstanding 174 million. What's the short float on Grindr? Let's see. I don't think it's really a meme stock. I don't know if it's that much of a meme stock. Short float is 10%. Okay, so the shorts are betting against it. Free cash flow is positive at 31 million for last year. It's not a ton. And last quarter they put up 75 million in revenue. That's not horrible. Last quarter they're only 9 million away from profitability. So it looks like they're going to become GAAP profitable next quarter. That could actually be definitely like a momentum building event when they become GAAP profitable again. And then as of Q1, they still have $300 million in debt. That one is a little annoying for me. I don't know why they have so much debt. I also have to check the interest rates that they have on that debt. And if it's, they got that debt in 2021 or if they recently got that debt. Revenue growth is 35% over the past 3 years. 33% over the past 3 years, 35% over the past year. Something to think about. Something to think about at the end of the day. Not all debt is bad. Yeah, I agree. So we got to go deeper into that. But let's see. I mean, dude, if Hims can go to the moon, and I know Hims is a different company than Grindr, but originally it was about dick pills. I mean, that's what Hims was about. But they offer new products and GLP and all this stuff. Hims down 7% today. If Grindr, if I'm not wrong, it's only for men. It's not for women. So I could be wrong on that, but I think it's just for men. If they start saying, hey, women that are gay can start using it and they build it for them as well, maybe that's another user base that they can attack as well. I know this is funny because like we've been making this whole Andrew Tate gay thing came up, but I saw this video today and I was just like, wait a second. Like, I wish I looked at this stock at $8 because it's not like the product is decreasing in value. And when the CEO said that we don't do anything about customer acquisition, customers just find us, that's when I was like, okay, that's exciting. If customers just naturally find you, all you have to do is figure out the monetization and the rest of the financials kind of work out. Usually the hardest problem with consumer apps is getting users. But if you're building something that's so niche, maybe the users just end up coming on their own. Okay, there you go. That's what we got on Grindr. I knew you guys would get a kick out of it, but I had to show this. I had to do this thought experiment out loud. And we'll see what ends up happening. Okay, so that's it for me. I think you would be better off with Match. I never liked Match's financials. If you look at their financials, they suck. The entire company has not really innovated with Bumble, Tinder, and Hinge. I don't like Match at all. This thing is appealing to me because it's niche, it's differentiated. There seems like there's a lot of room to grow, and their customer acquisition seems exciting as well. So we'll go more in depth and we'll take a look at it, but it is one thing that came on my radar today. Where's Nike after hours? Nike is currently down 7%. Wow, Nike actually took a hit. Market really punished them on this one. There you go on Nike. Now it jumped up to 98. Whoever called the head fake was right, but then it came right back down to this $87 level. So Nike definitely took a little bit of a hit today. Just saying all of this so you have an excuse to create an account. I mean, dude, I do have to download the app now. I got to know what product I'm investing in. Oh my God. But yeah, it is something to at least think about. Walgreens worst day ever since 1972. That is correct. Walgreens worst day ever since 1972, dude. Down 22%. Nasty day for Walgreens. But again, this is good. You want companies to get hit if they're not performing, because all that capital just left Walgreens and Nike, and it maybe is going into Palantir, which is probably going to crush on Q2. Maybe it's going into Nvidia. Maybe it's going into Amazon trying to make through $200. It is what it is, but that money just ends up rotating at the end of the day. All right, so there we go. I will not be streaming the debate today, unfortunately. I really wanted to, but I'm afraid of CNN, so we'll see. Yeah, I'll be tweeting about it. I'll put my Twitter in the chat. If you're not following me on Twitter, I'll probably tweet some stuff about it, but man, I really wanted to cover the debate. I really do. People are saying make a separate YouTube channel or something like that. Dude, it's not it's not worth going through all that. The whole point was to do it with everybody here, but I don't know. I think CNN will hopefully get enough pushback on this that they'll not censor streamers from talking about the next debate. But maybe Meet Kevin will win his fucking lawsuit or something. But yeah, it's annoying, dude. It's just not worth it. It's not worth taking the chance. All right, there you go. You could do a reaction stream, just not show it. Yeah, but that's not, dude. I wanted to like actually analyze the argument. Dude, I was thinking of it from a real intellectual perspective, like breaking down. You guys remember, dude, I did debate for 10 years. Like I understand debate very well. I understand communication. I understand the arguments. I understand how to like interact with shit. I understand how to break shit down. So I really wanted to do a thorough breakdown. But we can't because of CNN. Just don't share the CNN stream. Well, I don't think it's what is Fox going to be able to share it if CNN? No, right? Fox can't double stream it because Fox would get hit with a lawsuit as well. I think they're going to force everyone to go to CNN to watch it. So I guess we're going to have to see what happens. Professional debate is not the same as these debates. That's true, but remember, I did do public debate when I was on the USA debate team. I did a lot of public debates where we basically had the same thing. Like you see Trump and Biden, they get 5 minutes to talk and you have to be slow and concise with your wording. There were some debates I did where I was like speaking 500 words a minute, literally. And there were other debates where I literally was talking to like Mrs. Jackson, who has no idea what's going on. And she heard about this debate tournament this morning and she's volunteering and you have to convince her to vote for you. So I've had experience with various audiences. And so there's a lot of stuff in regards to crowd perception, public psychology, how to navigate that stuff, how to make an argument make sense for the average person. And it would be fun to watch it, but CNN is CNN. Grindr was founded by a girl. Really? Grindr founder. Really? It was founded by a girl? Interesting. I didn't know that. No, I'm getting 3 guys. Joel Smikai. That's who I'm getting. Joel Smikai. I don't know if that's a girl. It's probably not a girl. I'll look into that as well. I'll see. Calls on DJT. Well, one thing about DJT, dude, the put premiums on DJT are kind of ridiculous. I'm not selling puts on DJT, but the put premiums are kind of insane because if Trump loses, you could argue DJT crashes. So that's why the put premiums are high. If Trump wins, and not just the debate, but the broader election, you've got a president whose company is public on the stock market. I would imagine that's going to be a catalyst when you become the most powerful man in the world, president of the United States of America, and you have a company that's public on the stock market. And now imagine Trump starts truthing when he's president and not tweeting, and every single news publication on the planet has to go on Truth to get his updates. I mean, talk about pumping the stock, bro. When you're the president and your official statements are via Truth. I mean, dude, you would imagine DJT, as overvalued as it is probably just going to go up. So I'm not playing with DJT, but I can definitely see people that are betting on the volatility to the upside or the downside playing on DJT as well. Okay, cool. That's it for me. We'll have a daily Palantir episode out in a couple of hours, just talking about the space deal we got and a deal in the healthcare space that some people missed that we got yesterday as well. So I'll talk about those 2 things. And we'll be live tomorrow, 8:45 a.m. And we will break down the debate from yesterday. I'll be on Twitter. I'm not going to stream on Twitter because I'm also afraid that CNN might put a request to ban my counters. I just don't want to take a risk. I want to see how CNN interacts with other people first. I don't want to risk it. And then maybe on the next debate, we can stream it. But I just want to see how people kind of navigate it. So we'll break down the data tomorrow morning, and I'll talk about the highlights. Who was good, won, who was bad. I'll talk about who I thought won, who was good, who was bad. I think there will be an objective winner, and we'll see who wins. It's going to be 8 p.m. Eastern, and then yeah, that's pretty much it for tomorrow. There's no other events tomorrow. We'll have Palantir Weekly tomorrow. We couldn't do it last week. We'll be live this on Friday, and there's no earnings tomorrow. So yeah, we'll just cover the debate and break it down. Okay, cool. That's it for me. Thank you, everybody. Have a good one. Last check on the markets real quick before we end it out. Nike, Walgreens down a little bit more after hours. Nike down, 7.85%. They're down another percent, almost 8% on the day. So the market not liking their earnings at all. Nvidia's up a little bit. SoFi was up a little bit today, 654. Apple 214. Bitcoin 61.4. Robinhood 22.62. Palantir 25.26 after hours, and the S&P 500 at 546.59 on the day. Again, Palantir right here at 25.26. Not bad at all for Palantir. All right. Thank you, everybody. See you guys tomorrow, 8:45 a.m. on the market open. Bye, everyone. Have a good one.